the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares nudged higher as Asian markets traded mixed. So if we look at the Straits Times Index, it was up 0.1% at 4,416 points at about 12:57 p.m. Singapore time. And that's with a value turnover of some 536 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI closed in a green, up 0.22% at 4,421 points. Now in terms of value turnover, that's 1.19 billion Sing dollars. Gainers trailed losers though, 240 versus 326. Top advances for today we've got for you F Point, DBS and Soy Built Construction. And top decliners we've got for you AEM SGD, DFI Retail Group USD and Hong Kong Land USD. Well, in terms of companies to watch, we do have AEM, U.S. semiconductor test equipment supplier Advantest Test Solutions, made allegations of patent infringement against AEM and its subsidiaries. Now, elsewhere from how Tokyo's Nikkei surged over 4% to a record high early on after fiscal dove Sanae Takaichi was elected to lead Japan's ruling party, to how Stellantis is reportedly planning to invest about, get this, $10 billion in the U.S. We've got more international and corporate headlines in focus. And joining me on the line today is Chin Hui Leong, co-founder of The Smart Investor. Chin, welcome back.
Hi, Tian Tian. Glad to be back.
Great to have you as well. And Chin, let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises if we look at the biggest movers?
Yeah, I think the SDI hit a new high today, intraday anyway. And what's interesting is this morning when I was joining the Financial Literacy Day at SGX was that they shared that the price to book value for the SDI was 1.4 times at the end of September. This compares quite favorably against October 2007, where the price to book was actually 2 times, right? So it's still quite a distance away from October 2007. And I mentioned this benchmark because October 2007 was just before the great financial crisis hit. So it doesn't mean that index hitting a new high would mean that it's actually overvalued, because if you compare it back to the GFC days, it's actually still quite a distance.
Okay.
I thought I'll mention 2 stocks. One will be ST Engineering and SGX. That's the 2 best performing stocks today. The year-to-date gains for ST Engineering is somewhere in the region of 90%. And for the case of SGX, year-to-date gains is actually 42%. And what I thought was interesting is both companies have sort of telegraphed their plans to actually increase their dividends in the near term and also over the midterm, right? So in the case of ST Engineering, they are looking at 18 cents per share versus 17 cents per share last year. So they're looking to pay out 18 cents per share this year. And then after, from 2026 onwards, they're looking at adding an increment of 1/3 of year-on-year profit increase, which if they record any, they are pledging to pay out 1/3 of that increment as dividends as well, right? And in the case of SGX, they're even more aggressive. They're looking to pay out 0.25 cents every quarter from fiscal 26, which started on 1st of July this year, all the way until fiscal year 28, right? So I think the clarity in the dividend sort of projection is helping the shares gain as well.
And zooming in on the other companies to watch, I know you mentioned the local boss as well as ST Engineering. This company, we want to take a look at it today, and that is AEM in the semicon industry, because U.S. semiconductor test equipment supplier Advantest Test Solutions made allegations of patent infringement against AEM and its subsidiaries. So far, AEM said that the complaint does not affect its business operations, its existing commercial offerings of products, nor its ongoing ability to serve customers. But really, how would you read into the development? What does it mean for investors?
So, full disclosure, I used to work for Avantes, and then today I own shares of AEM, right? So, I think that right now we're at a stage where the allegations are made and the outcome of or any settlement is still unknown, right? But what I thought was interesting was it point to an arbitration which they settled with Avantes back in July 2023, in which they actually paid out US $20 million to Avantes, right? So I do not know whether they're trying to point to a specific figure to sort of reduce the sort of variation of outcomes which people are imagining out there, right? If indeed it comes down to AEM having to pay $20 million US, then it is something which they can afford, but it will be quite a sizable hit for the company, right? Because if you look at the first half of 2025, they generated the $5 million in free cash flow. So that itself is enough to cover that $20 million. And right now on the balance sheet, they have roughly about 60 million Singapore dollars in cash, right? So basically what it says is if indeed that amount, which is US $20 million, then it's something they can absorb, but it's a sizable cut from what they have today, right? And bear in mind that Avantes is a $118 billion market cap company, and AEM is like 200 times smaller than Avantes. So I don't think they can afford a prolonged court battle and so on. So these are the sort of things to keep in mind. Beyond that, I think the bigger problem for AEM may be whether their customers, especially Intel, is able to continue ordering machines from them, because this sort of court case is not the only issue they have to deal with. In 2024, 79% of its trade receivables are actually from its top 5 customers. So there's a fair amount of concentration there, which investors need to be aware of.
Okay. And let's continue to stay in Singapore, Chin, and talk about S-REITs. In particular, we've got this article by a colleague, opinion piece, if I recall correctly, from a colleague from the Business Times, and it is titled, The Internal Management Model's Uphill Task in Gaining Traction Among Singapore REITs. Now, the case in point here is Sabana REIT, but really, what are the challenges for S-REITs in adopting an internal management model? And why is the model more beneficial for unit holders than having an external manager?
Yeah, so your colleague has done a good job in explaining, so I've also learned new things. So according to him, an internal manager is REIT managers which are owned by the unit holders themselves, and external manager is someone which the sponsor of the REIT typically hires to manage the REIT, right? So as you can tell from the connection there, there's of course concerns over conflict of interest and so on, right? But so what are the benefits of having an internal manager? What he listed down is lower costs and to reduce conflicts of interest, right? But for me, I think the real question is really how do you operate, or whether you're internal or external, how do you make the most out of whatever advantages you gain from each model, right? So in the case of internal models, there's lower costs, less strings attached. Maybe you won't have to deal so much with the needs of the sponsor. And we've seen some positive cases where Link REIT from Hong Kong is, I think, they might be smaller than CICT now, but they have done well over time, right? But if you're an external manager, you also benefit from things like having the sponsor back you when it comes to refinancing your loans. You have the sponsor pipeline to tap on and so on. So I think there are pros and cons in each model, and the real question is how do you maximize the advantages you can gain from each model.
Now, if you're just tuning in, we're in conversation with Chin Hui Leong, co-founder of The Smart Investor. Well, Chin, across the region, one can't help but look at Tokyo today, I believe, closed nearly 5% higher. Earlier, it surged over 4%, the Nikkei to a record high after fiscal dove Sanae Takaichi was elected to lead Japan's ruling party. Now, she is also set to become the first female prime minister in Japan. So what are investors banking their hopes on, and really what is the near-term outlook for the Japanese yen then?
So the new Prime Minister, Sanae Takaichi, is supposedly she has a more aggressive monetary policy where she intends to print more money, which will add fuel to the economy and provide funds for companies to expand. And to add to that, she's also looking at increasing government spending, especially for infrastructure and so on, right? So in a sense, you can see how the yen has responded. It has fallen, probably because if you print more money, it means that the yen will become less valuable, right? But if the yen becomes less valuable, it could be good for exports. So for car makers like Toyota, for example, right? But on the other hand, a lower yen is also maybe good for my vacation in December. I digress.
Okay.
So, but of course, a weaker yen also means that things which they buy will be more expensive because a yen will be worth less than before. So I think there's a balance that she has to strike between trying to stimulate the economy and also keeping inflation in check.
Okay. Now, further away, Chin, talk about a hedge against inflation. Gold surging past this $3,900 an ounce mark for the first time today, driven by safe haven demand amid a U.S. government shutdown, alongside growing expectations of additional Fed rate cuts. Again, the question that we've been asking for quite some time, the answer changes according to when we are talking about. What are the levels to watch for gold?
I think listeners might know that I don't engage in such guessing games because, quite honestly, your guess is as good as mine, right? One thing I'll mention, and this I think comes from Professor Aswab Damodaran, is that if you're going to play a game, know what game you're playing, right? So there's the pricing game, and then there's the valuation game. In the case of pricing game, that will be I think very reflective of how the gold pricing works, right? You're buying gold at a certain price and hoping that someone else actually buys it from you at a higher price, right? So you cannot complain if that no one is willing to pay a higher price, or if someone wants to pay a lower price for whatever you bought it for, right? But in a valuation game, it's when you base your purchases based on how you value the business or something which generates cash flow, which gold doesn't, right? So it's just different games people play. And if you want to play the gold game, you can. Just know what your game you're playing.
And finally, before I let you go, Chin, not sure what game this company is playing right now. Stellantis reportedly planning to invest about $10 billion in the US as it refocuses on the market that's pivotal to its profit. Now, that is according to sources familiar with the situation, who noted that Stellantis may announce in the coming weeks about $5 billion in fresh money on top of a similar amount earmarked earlier in the year. What do you make of the move given the troubles Stellantis is facing of late?
I think you hit the nail on the head there because they've been suffering from falling revenues. Free cash flow is still negative to the tune of, I think, 12 billion in the last 12 months. You have cash flowing out. So they are bleeding money. And then they are also in a debt position of, I think, around close to 10 billion, right? So they're in a situation where they need to revive their revenue and so on, which is why I think this investment actually comes into play. Because one of the things which they identified is that they underperformed in 2024 because of the discontinuance of certain models like the Jeep Cherokee and the Dodge Ramtrak, I think. And they are trying to revive these brands and furthermore try to invest $10 billion in the U.S., partly also to, I think, avoid tariffs which the U.S. administration has actually imposed. So it is a period of time where things don't look too good because you're burning money, your revenue is falling, and then you have to spend even more just to try to recover the situation. So I think there'll be quite a lot of uncertainty around the company on whether they can pull off this turnaround. And I think if you're an investor, that's what you should be watching.
I see lots to watch, as you mentioned as well. Thanks so much, Chin, for the insights today. That was Chin Hui Leong, co-founder of The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.